Welcome to FinBytes. Hi everyone, I welcome you all to this IPO analysis video on Manyavar, which is Vedant Fashions Limited. I hope this video will be helpful and informative. Towards the end of the video, I'll also be sharing my personal views on this IPO. Let's check the quick history and major milestones of Vedant Fashions Limited. The company was originally incorporated as Vedant Fashions Private Limited at Kolkata on May 24, 2002. Subsequently, company was converted into a public limited company on July 16, 2021. Some of the milestones achieved by this company are, in the year 2012, they crossed a 100 crore revenue mark from their exclusive brand outlets. In 2017, they acquired a brand called Maybas. In 2019, they crossed a 1,000 crore revenue mark from their exclusive brand outlets. In 2020, they launched Manyavar mobile application app. Coming to the business outlook, they are the largest company in India in the men's Indian wedding and celebration wear segment in terms of revenue, EBIT and profit after tax for the financial year 2020. Manyavar brand is a category leader with a pan-India presence as of financial year 2020. From the table, apart from Manyavar, they have other brands for both men and women. They have a whole range of products comprising from value segment to premium segment. This is a asset-light business model with respect to plant, property and equipment. This enables them to achieve a high return on capital employed. In the financial year 2021, 44% of sales were generated by their franchisee-owned exclusive brand outlets from Tier 1 cities. 42% from Tier 2 cities, 12% from Tier 3 cities. The remaining 1.42% of the sales were generated from international markets. They operate under majorly 5 brands. For the men's Indian wedding and celebration wear market, Manyavar is a mid-premium segment which focuses on kurta, sherwani and kids wear. Manthan concentrate on value segment for men and majorly focuses on kurtas. Tuamu is a premium brand for men, focuses on kurta, sherwani, suits, etc. Coming to the women's Indian wedding and celebration wear market, Mohe and Maybas are their exclusive brands for women. Mohe is a mid-premium segment for women which focuses on lehengas, saris, gowns. Maybas is mainly focused on regional wedding and celebration wear for South Indians. They have range of apparels for women, men's and kids. Maybas have a very strong presence in Andhra and Telangana states. Industry outlook. Domestic apparel retail industry witnessed a CAGR of 9% from FY15 to FY19. During FY21, we can also witness a degrowth of around 30 to 32%. Reason is due to COVID lockdowns. Going forward from 2022 to 2025, it is expected to grow at a CAGR of 25 to 27%. There are also some of the factors which supports this growth rate, and the reasons are as follows: young population in India, rising urbanization and rising share of working women, deeper penetration of branded players and increased awareness of fashion trends, and also e-commerce penetration. Other reasons can be seen in the figure. All the apparel segments are tend to register higher growth rate during financial years 2022 to 2025. For financial year 2025, it is projected that men's wear contributes 44%, women's wear contributes 39%, and kids wear will be contributing 18%. These are some of the domestic and international brands which has been dominating in men's and women's wears. From the table, we can also see that there are few competitors who are concentrating on the same business line as Manyavar and Mohe. Let's have a look on their total revenue segment mix. Revenue contribution from each brand for last 3 years can be seen in the table. In FY21, 84.2% of sales was by Manyavar, 7.47% was by Mohe, and 8.33% by all other brands combined together. Manufacturing facilities, procurement, manufacturing, supply chain, and distribution processes are based on data analytics and algorithmically managed. Some production processes are carried out in-house at the factory, and a large portion of their manufacturing is also carried out by jobbers, third-party manufacturers. with whom they have long-standing relationships. Distributor network. Ethnic branded sales can be done through exclusive brand outlets, multi-brand outlets, large format stores, and e-commerce. Exclusive brand outlets provides consumer a premium experience. Exclusive brand outlets is the best strategy to establish strong brand presence and customer connection. Hence, we can see Vedant Fashions Limited follow a similar strategy for their sales. Most of their revenues are generated from exclusive brand outlets. Below, we can see their EBO's presence throughout India. They also operate in other segments such as multi-brand outlets, large format stores, and e-commerce. Recently, they have launched their mobile application of Manyavar for e-commerce. Revenues from various sales channels can be seen in the table. For the financial year 2021, 90.14% of the sales was generated by their exclusive brand outlets. 7.63% was generated by multi-brand outlets and large format stores, and 2.23% was generated by e-commerce. Let's have a look at company financials. All the figures mentioned here are in crore rupees for the ease of understanding. Checking their balance sheet, they have an equity share capital of 24.79 crore as on March 2021 and total reserves of 1066 crore for financial year 2021. Total reserves have been continuously increasing, which is a positive sign. They have no borrowings in their balance sheet and it's a debt-free company. They have considered a buyback of 12 lakh shares in April 2020 and 27 lakh shares in July 2021 at 680 and 990 rupees respectively. Mostly, there will be an impact on reserves and surplus due to this buyback in the upcoming quarter. We need to check their latest financials to see how the revenues from operation has improved and what is the impact on balance sheet after this buyback. Coming to P&L statement, revenue from operation was increasing till 2020 and had a significant impact in March 2021. The reason is due to COVID. Revenue from operation degrew at negative 16% CAGR from 2019 to 2020-21. Revenue from operation degrew at negative 38% for the previous year 2020 to 2021. PAT degrew at negative 13% CAGR from 2019 to 2021, and if we compare for the last year, it degrew at negative 44%. Operating margins degrew at negative 15% CAGR from 2019 to 2020-21. If we consider the previous year, operating margin degrew at negative 38%. Cash flow from operating activities is positive, which is a good sign. Coming to the IPO details, it is a book building type IPO. IPO issue size is 3,149 crores. The issue is completely offer for sale, meaning all the proceedings will go to the shareholders. Face value of the share is 1 rupee. The price band they are quoting is 824 to 866 rupees. Minimum shares we should apply is 17 and minimum amount is 14,722. As retail individuals, we can apply for a maximum of 13 lots costing 1,91,386 rupees. The shares will be listed on BSE and NSE. Issue opens on 4th February and closes on 8th February. Other dates can be seen in the table. The allotment proportion are as follows: QIB 50%, NII 15%, retailers 35%. The objective of this issue are as follows. It is to achieve the benefits of listing on stock exchange and carry out the OFS, offer for sale. Valuations and peer analysis. PE ratio. We will consider last 3 years weighted average EPS, which turns out to be 7. PE ratio considering highest price band, which is 866 rupees, and weighted average EPS from 2019 to 21 turns out to be 123. The issue is highly priced and overvalued, and in the present market scenario, subscribing to this IPO might be quite risky. There are no listed peers to compare directly. Return on equity. ROE has decreased from 24.28% to 12.32% between financial year 2020 and 2021. Return on capital employed, ROCE, has also decreased from 31.6% to 19.04% between financial year 2020 and 2021. In the graph, we can check the EBIT margin, net profit margin, ROCE, and interest coverage ratio of Vedant Fashions Limited and its peers. We can see that Vedant Fashions Limited is outperforming its peers in all the 4 parameters. As far as the risks are concerned, this business is highly concentrated on Indian wedding and celebration wear. In future, consumer preference can change and this might have adverse effect on the business. Other than designing, majority production process are outsourced to third parties. Any disruptions with such third parties might have adverse effect on the business. Also, this business depends on organization of wedding, festivals and other ethnic celebrations. Hence, business might be affected during seasonal variations. Another risk which I am finding in this company is the concentrated management risk, meaning Mr. Ravi Modi is skilled and key personnel for the organization, and in future if he leaves the organization there might be adverse effect on the business. This may not be so important as of now as he holds majority of the stakes in the company, but if anyone investing in this company for long term, one has to keep an eye on the management changes. Also, there are few litigations in the company and also litigations involving promoters which needs to be considered. Coming to my views on this IPO. Before sharing my view on this IPO, this is a standard disclaimer. Whatever information provided in this video is purely for educational purpose. Along with this information, kindly do your due diligence before investing. Invest only if you understand the pros and cons of the company. In case you don't have enough time to do research on this company, kindly contact your financial advisor. Coming to my short-term view, I may skip this IPO, but if the subscription gets huge response from QIB and NIS, I may apply for it. I will keep you updated on the last day using pinned comment in the same video. For long-term view, I will not be applying as the issue is overvalued and there is nothing much left for the retailers. If you think the information was useful, support us by pressing the like button and share this video with your friends and family members who are interested in investing. If you are first time visitor to our channel, don't forget to subscribe. See you soon with another interesting video. Thank you and have a great day. Bye.